Hey, what's up, my friend? So I'm sure you know what is technical analysis and you are overwhelmed by it. You have things like candlestick patterns, RSI, MACD, Fibonacci, retracement, pullback, trend markets, breakouts. How do you actually make sense, right, out of all this madness out there? So in today's video, I'm going to, break it down to you step by step what exactly technical analysis is all about. How do you actually make sense, right, from all the madness out there and, use it and improve your own trading results. So let's be clear, right? Technical analysis, there is a lot of trading tools and techniques out there, but you can pretty much break them down into 4 categories. The first category is what I call charts. This is where you get things like candlestick charts, line charts, bar charts. And if you want to dive deep a little bit more, candlestick charts can even be broken down into individual candlestick patterns. This is where you get things like hammer, shooting star, engulfing pattern, etc. So this is the first category, charts, and they are useful, right, to help you identify the current market condition. Is the market trending higher? Is it in an uptrend, a downtrend? Is it in a range? So this is what candlestick charts are for. And to also talk a little bit more, candlestick charts, or rather candlestick patterns, they are useful to help you serve as an entry trigger to tell you where exactly to enter a trade. Maybe when the price breaks above resistance, or it could tell you when to get out of your trade when setting a stop loss, maybe below the lows of, for example, a certain level. Okay, so this is the purpose of candlestick charts. Number 2, drawing tools. Drawing tools refer to things like support resistance. It refers to things like trend line, trend channel. So these are drawing tools on your chart where, in essence, right, you are drawing things on your chart. That's why we call it drawing tools. And drawing tools are useful to help you identify the area of value. This is especially so for discretionary trader, price action trader. You can actually use it to identify support resistance, identify where might potential buying pressure come in, where might selling pressure come in to short the markets and stuff like that. So this is what drawing tools are mainly used for, to identify areas of value. Number 3, trading indicators. This could be things like RSI, MACD, Fibonacci, moving average. And indicators, they are very versatile because there are so many types of different indicators out there. We won't dive too deep into today's video because we just want to touch how indicators can help you from a technical analysis standpoint. So indicators can have many purposes. For example, they can help you identify your area of value. For example, a 50-period moving average. In a trending market, the price, right, tends to respect the 50-period moving average, where you can expect it to bounce it off a number of times. So the 50-period moving average in this case can serve as an area of value. At the same time, you have tools like average true range indicator. It can help you manage your trade to set a proper stop loss. So for example, let's say the price has come into an area of support and you don't want to set your stop loss just below the lows of support. The price might spike through it and then reverse up higher. So how do you give it some buffer so you don't get stopped out too early? You can use a tool like the average true range indicator to determine, right, what is the historical volatility of the market. It could be 20 pips for Forex market. It could be $5 for particular stocks. So once you have identified the historical volatility, you can take that number or that buffer and then just add it below to the low of support. So if the low of support is like $100, the ATR value is $5, your stop loss can be 100 minus 5 at $95. So this is how the ATR indicator can help you, manage your trades to set a proper stop loss. And the fourth and final category is what we call volume. Personally, I don't use volume in my own trading, but there are other traders out there who swears by it. So who am I to say that it doesn't work? So for volume, right, what most traders use it for is to, for example, identify the strength or weakness of a trend. So in a trending market makes a higher high and higher low. So for people who use volume, right, when there's a pullback in an uptrend, they want to see decrease in volume. And when the price breaks out of a new high, they want to see an increase in volume. So when they see this so-called pattern, right, they'll say that the trend is healthy. Okay, so this is how volume comes into play. And also when some traders, when they trade breakouts, they want to see an increase in volume, right, to kind of, say that, hey, this breakout has a higher probability of working out. But again, I don't use volume in my trading, but there are other traders who use it. So I'm just sharing this other aspect of technical analysis that you can consider. So now the final question is, how do you actually use technical analysis in your trading? There's so much out there. I just covered 4 brief categories, and within these categories we have like subcategories within it. So how do you actually make sense of all this technical analysis knowledge out there? So very simple, right? 2 guidelines for you. Number 1, know the purpose of it. So I just briefly explained to you what are the purpose of all these different technical tools out there. For example, charts can help you identify market structure, drawing tools can help you define your area of value. So know the purpose of all these tools. You must know the purpose, because without knowing the purpose, then it's going to be very difficult to know what fits right for your needs. Make sense? Know the purpose. That's the first thing. Second thing is this. Take what you need and discard everything else. So yes, I've shared with you 4 different categories of technical analysis, but it doesn't mean that you must use everything from all 4 categories. It doesn't mean you have to use all indicators, because I just shared with you that I myself don't even look at volume in trading. So in essence, my trading has now been boiled down to just those 3 categories. And if you want to take things a step further, you can maybe just focus just on charts, price action, just the first category. That's fine. If it works for you, that's fine. Who is to say that, oh, that can't work? No. So you have to take what you need. You have to know that. This is why it brings back to my earlier point. You have to know the purpose of your tools. And once you know the purpose, you know what you need, then you can discard everything else. And this is really what a technical trader is all about, right? To take what you need, find the tools that meet your need, and then ignore everything else. Everything else will be noise to you. Okay, so with that said, I hope this helps. I wish you good luck. Good trading, I will. Oh, before that, we need to do a recap. So a quick recap, right, to what technical analysis is about in the big picture. Number 1, charts, right? It can be used, as charts to help you identify the current market structure, market conditions, right? Could be line chart, bar charts, candlestick charts, etc. And within this category, you have things like candlestick patterns, which is a little bit more microscopic in nature. Number 2, you have drawing tools like support resistance, trend lines, trend channels to help you identify your area of value. Number 3, you have indicators like, average true range, moving average, RSI, MACD, etc. And it can help you to manage your trades. It can help you to identify area of value even, and much more. And number 4, volume, right, to help you assess, right, the strength or weakness of a market or the strength of a breakout, etc. So with that said, I wish you good luck, good trading. I will talk to you soon.